Your market news now. Asian shares were broadly higher with Hong Kong leading the gains. Today's US CPI figure will give markets a sense of whether the disinflation trend is continuing. The data comes a day before the last scheduled Fed decision of the year. The US central bank is widely expected to hold rates, with most market focus on whether it will try to temper policy easing expectations. Meanwhile, traders will also be looking ahead to the Bank of England's rate decision. Monetary policy announcements are also due from the European Central Bank, Switzerland and Norway on Thursday. To give us perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, you're looking at Asian markets, European markets, as well as US stock futures, which are nudging higher. What's driving the sentiment?
So far markets, as you said, are tiptoeing, and that's ahead, and of the numbers that the data needs to be released. And I think they're more cautious. Remember, as you said, other than the Federal Reserve's making the interest rate decision, we also have our CPI coming out tomorrow. We have the most important one coming out of the US today, which is their November inflation, which has a potential to influence the decision on Wednesday. And also we have a decision that the policymakers from China have to make, and that is to tell us how much stimulus we can expect next year, as they're rounding up their meeting today. And also locally, we've got our October retail sales number. So all those things are trying to drive the market, and bearing in mind that by the end of this week, from next week, markets will be quiet. So people also are looking to take profits where they can, and also try to end the year also in a positive. As we're talking today, the JSE for the year so far is down 1.6%. The rent has weakened almost 11%.
With the FOMC meeting, we are expecting Powell to leave the rates unchanged. But when it comes to key messages coming out of that post-FOMC press meeting, what messages are you going to be listening out for?
Already markets have started to factor in that come early March next year, we should be expecting to see some rate cuts. So markets will be looking for clues that definitely will the guys be prepared to start cutting, provided inflation continues to behave, and also provided what's happening with the labor market. And as we've seen, the labor market numbers that were released on Friday, yes, they were more than expected, but markets started reading that differently, saying that there's also a good indication that there won't be any recession. So the scenario of soft landing has already been factored in.
So I mentioned that we're expecting the ECB on Thursday. If we had to look at the ECB versus the Fed, which of the two is likely to lower rates first?
Probably the Fed, We know the ECB, they continue to be cautious. And as much as we know that both the ECB and the US Fed, they are kind of divided, you still have those people who are still dovish. But yes, I think the US Central Bank, because in a way, they're a de facto leader when it comes to interest rate setting. And anyway, they're the first one who started increasing interest rates versus the ECB. ECB took a little bit of some time before they started increasing interest rates as compared to the US.
As we look ahead to 2024, I mean, what would you say is the number one question that your clients are asking you right now?
This whole thing about the property sector when it comes to China, because it accounts for 30% of their GDP, and so far we see that it continues to struggle, and it also has a potential to start discouraging some investments in that particular country. And I think for the first time ever, for the quarter, we've managed to see outflows when it comes to Chinese equities. So that tells you that the narrative is continually changing. So hence the decision that have to be made today by the Chinese policymakers is very important to see how prepared they are to be able to have the economy next year.
Speaking of next year, what's your conviction of it? Are you bullish or bearish? And also, what's important for you?
I think we'll continue to be cautious, because so far we've seen that other than company fundamentals, markets have been driven by interest rate decisions and also some geopolitical tensions here and there. We don't know whether the current one with Israel and Hamas will continue to be localized. We've seen there've been a tanker, the chemical tanker that have been bombed. So we don't know whether they will contain that to be localized. The issue about Russia and Ukraine, and bearing in mind that we don't know what else might happen. Other people, they've got a potential to join when it comes to these tensions. So we'll continue to monitor stuff like that. And unfortunately, company news, company fundamentals, that's supposed to be driving the markets. The real economic issues are supposed to drive the economy. But so far, we've got funny things happening here and there. So we just have to continue to be cautious and play by the ear.
Speaking of those funny things happening here and there, to what extent have you repositioned your portfolio in 2023?
No, for the first time ever, we had a decent proportion or exposure when it comes to bonds, because at some point they were offering the best deals so far. So this is something that we have never used to do. We'll have like 20-25% exposure to bonds, but this time around there was a time where we even had more than 50% exposure to bonds.
Well, and then looking at 2024, are you still positioned that way, or do you think some the aspects will change?
So far, we've been seeing yields dropping, and we don't know they're going to drop up until where. But if they continue to drop out, then definitely we will continue to lighten up when it comes to bonds. But it all depends on the yields going forward. And so far, we've been seeing that these yields have been driven by expectations when it comes to interest rates.
As we wrap up, the one risk for you for 2024?
The local elections when it comes to South Africa, we don't know how it's going to pan out.
All right, Makwe, thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers. And looking at the Rand, currently trading at around 18.92. It's been on an upward trajectory since November 15th, reaching 18.11. And any kind of upside momentum we could see in the currency is going to be impacted by that US CPI figure, which we are expecting at 3:30 South African time, to see if it does surprise to the upside. Nonetheless, gold at this point edging higher, rather up 0.2%. And oil holding steady. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.